So in this video, when do I trade Forex? Welcome to Just FX Pro. If you're new here, this is the basic, where this is a basic or foundational videos for beginners traders, for those who have actually been wanting to learn what is Forex. So I'm doing this as a free video. You could always come back to this channel to watch it over and over again, so you get to understand what Forex is. So if you're new, you could go back to the previous videos from the history of Forex up until this time. All right. So okay, when do I trade Forex? So there are some terminologies we're going to be learning here, and let's go. All right. First of all, let me put this thing on. Okay. So yeah. So these are the terminologies. What is liquidity? What is spread? What are volumes? And what is volatility? So you must have heard some of these terminologies or these terms in videos when you're watching videos about Forex. You must have heard the spread is too high, or rather there's liquidity in the market, or market something like liquidity grab, liquidity sweep, all the stuff. You will be asking, what is liquidity? You get. So now spreads here is now volume. We're going to talk about basic liquidity, the terminology as per basic foundation. And we're also going to talk about liquidity as per advanced. You get, that's when that's when we'll start talking about liquidity grab. So if you follow through this my videos, you would see the topic liquidity grab, liquidity sweep. You will see one of them there. You get. So when we start talking about advanced, that's when you would see most of these videos. So volume and volatility. So let's start with spread. So what is spread? Understanding what spread is you have to know, first of all, there are two currencies. We have the euros and we have the dollars. So in this case, we have euro USD. So the first currency is usually the base currency, and the second currency in the pair is usually the quote currency. So if you must have seen pairs like this. If we go down to let me go to Euro USD. This is Euro USD. So you see here, this is a pair, a Euro USD. So euros against dollars. So, and this is the exchange rate. So that's kind of like what we're talking about here. So in this case, the difference between this base currency price and the quote currency price is what is called the spread. So the base currency price, one is selling and one is buying. You get, the base currency is selling, they're selling the base currency, and they're buying the quote currency or buying the base currency. So in this case, the base currency price is this and the quote currency price is this. So you know, when it's like you go to a place and you want to buy something from the market. Let's say you go to a marketplace and you want to buy something, let's say a tomatoes market, for example. So for a tomato market, the seller or the person who has the product is offering to buy at a certain price. Let's say at $20, and you that is buying it, you want to buy it at a lower price. You want to buy it, let's say, at $15, right? So the difference between your price and the seller's price is 5. So between 20 and 15 is 5. All right, that is what is called your spread. So if you take out this number, subtract it from here, you're going to get 1.4 pip spread. Okay, so that is what spread is. So spread is the difference in price between the buying and the selling of the base currency. All right, so if that is established, let's move forward. Now, volatility. Volatility here in these terms simply means when market condition begins to change rapidly over time. So it depends on how fast, or the speed in which the market conditions begin to change. So it just means the market is volatile. So you can have a high volatility market, you can have a low volatility market. The high volatility market simply means big moves take place and there are major news releases, and these are where traders love to trade because market is moving fast and market is going to reward them fast. So low volatility just simply means sluggish market where market is so slow and there's no major news release. So traders do tend to avoid this type of markets because they are slow, they are not fast and rapid, right? So this is why it is called volatility. So volatility is just when the condition of the market begins to change rapidly. That's what is called volatility. So on the other hand, liquidity now talks about the participants in the market, the people in the market. So I usually say something. Liquidity talks about the number of people in the market, while volume talks about the quality of the people in the market. So you could have a low liquidity and a high volume. You could have a high liquidity and a low volume. It's possible. So a low liquidity means not many participants are in the market. It is the worst time to trade because people are not really trading it at that point. So the high liquidity is usually lots of participants in the market, and it's also a best time to trade because a lot of buyers are in that market and they are pushing the market to go long, right? And or rather the other way around, a lot of sellers are in the market, they're pushing the market to go short and they're selling the market. So it is a good time to have a good liquidity. So, and in this case for volume, market participants doing large numbers. So when I said volume talks about the quality of the market participants, the liquidity talks about the quantity of the market participants, why volume talks about the quality of the market participants. So you could have 5 people, which is between 5 and 50, 5 people and 50 people. The 50 people is high liquidity, right? And the 5 people is low liquidity. Then for the volume, you could have that 5 people doing numbers of like $10 million each. So you have about $50 million, right? Pushing the market. And you can have those 50 people doing $1,000 each. So you have about $50,000. Do you get? So you can see that the money the 5 people they are bringing into the market, their capital, their investment into the market is in large numbers. So the quality of them is more greater than the ones in low the ones of high liquidity but low capital or low investment. So you could have high volume, which is market participant doing large number of trades in a certain currency pair, and low volume, not many others happening. It's either a holiday, end of London session, Sydney, beginning of Sydney, and all of that. So you could also have them in pairs. You could have a high liquidity and a high volume. You could have a low liquidity and a low volume. So it just depends on the market. Okay, so what are the 4 sessions to trade in? Now we have different sessions and different time zones of forex trading. So we have 4 major markets sessions or stock exchanges. Is it stock exchange now? Um, okay, I think that's about it. So, but we have 4 major markets in the world, or 4 major countries in the world, or continent in the world that we get to trade forex due to their time frames. All right. So we have Sydney, we have Tokyo, we have London, and we have New York. So in the Sydney opens by 5 p.m. Eastern time and closes at 2 a.m. Eastern time, while the Tokyo 7 a.m. to 4 a.m., London 3 a.m. to 12 p.m., New York 8 a.m. to 5 p.m. So you see New York is closing 5 p.m. and Sydney is opening again by 5 p.m. You understand? So it's kind of like it goes round and round and round. So as this one closes, it starts all over here. So markets opens on Mondays, usually for the currency markets, opens on Mondays and closes on Fridays. So within that Monday, you have the 4 session play out throughout that day, and then it comes back on Tuesday to start up the next session or the next day to open the next market. So let's dive into them. So for Sydney session, where the where the trading day officially opens in the forex market, it's usually by 4 p.m. Yeah. So by 5 a.m., right? So we saw 5 a.m. there, 5 p.m. rather. Yeah. So we said the smallest and the calmest, it is the smallest and the calmest of the mega markets. So we have AUD and NZD pairs will have initial movements here. So AUD pairs, these are the best pairs to trade in this Sydney session because it's the currency that is most dominant in the country or in that particular region, right? These are the currencies they use, either the NZD or the AUD. All right. So now we have Tokyo, we have the Japanese, we have the Japanese yen is being traded around that point, around that time zones as well. Okay, this is the second session and it is the third largest forex trading center in the world. All right, it's the third, yen is the third most traded currency in forex and sees 6% of forex transactions. So part of the Asian session, Sydney and Tokyo is called Asian. So we call these two Asian sessions, the Sydney and the Tokyo. They are both called the Asian sessions, right? So we have just, if you're talking about sessions, we have just three sessions. We have the Asian, we have the London, we have the New York, right? So it's just the Asia now comprises of these two. So during the Asia session, you're trading NZD, AUD, and yen during the Asian session, right? So the next one is London. This is a third trading session, which encompasses GBP, euros, and Swiss franc, right? And CHF. So this this is the largest what do you call it, forex trading center in the world, historically being center of the trading. Yeah. London has the largest actually before New York. So 34% of all Forex transactions, most active trading section. It is the most active trading session. Yeah, actually. And it has usually have high liquidity, high volume, lower spreads, and major news do is usually released within this trading time frame. This starts by 4 p.m or by 3 p.m. Yeah, and closes around 8 or 9 thereabout. Okay, so yeah, this is it for London session. So remember, when you're trading London session, you're looking out for the pairs that are the currencies that are most active in the London session, which is the GBP, the euros, and the CHF. So therefore, for the New York session, which 85% of trades involves USD. 85% of trades in the forex market involve the United States dollars. So big moves take place during early New York session and this marks the end of the day. It usually marks the end of the day. Once this one finishes, the end of that trading day or time has ended. All right. So it now begins from the Asian again. So it usually carries the major news releases as well. It occurs in the New Year sessions, and the pairs to look out for here, the currencies to look out for here is the USDs and the cards. Okay, so you have any currency pair you have that has these two currency in them should be taken seriously when it comes to these time frames, or rather this time zone, this time for trading. So usually starts by 4 p.m. or 3 p.m. up until 8 a.m. or 5 p.m. This depending on your time zone. So I'll show you where you could find these things, but we'll go. Let me just quickly show you. I'll quickly show you here. So you have forex time converter, forex time zone converter. Okay, yeah. So yeah, so at the moment it's on GMT. So here you could change it to wherever country you're based, right? And right now I'm in Africa. In Africa, I'm in Lagos. Yeah. So you could change it to Lagos, then it to align with your timing. Right now, this is the weekend, and that's why all the markets closed. Usually, if it's open, if it is during the weekday or when market opens, you're going to see it open here, right? So at this point, you see the Sydney and the Tokyo, then later you see Frankfurt. And so these two, Frankfurt and London, is just simply the European session, right? Or the London session. So these Sydney and the Tokyo is all the Asian session, right? So it's all Asian session. Then you have the New York session. So Asian Sydney opens first by 11 at my time, by 11 p.m. today, and closes by 7 a.m. while Tokyo opens. So you can always go to the site forextimezoneconverter.com and you would see this thing and change the time frame here. So yeah, that is it for that. Let's go back to our study. What is the best time to trade? Now, the best time to trade are usually the overlaps. I'll show you what overlaps look like. This is what overlaps look like. So we have the Sydney start first, 2 hours later, Tokyo joins in. So between the time Sydney is still open up until like 5 or 6, Tokyo is also open and they are running together. So once you see the timing lapping each other like this, before the close of this one, this is what you call an overlap. They are overlapping each other here. So, and there's another 1 hour overlap between the Tokyo and the London, and there's another about 4 hours overlap between the London and the New York. So these are usually the best times to trade on the overlaps, right? And the worst time to trade is usually holidays where you have New Year holidays, Christmas holidays, or whenever the banks are not open. Okay. So that is when is the best time to trade. So what's time to trade? I already said it here. So when there's non-overlap, major holidays during the starts of the sessions too. Sydney sessions are not really advisable to trade. Then market is usually choppy. In fact, what I do on the Monday, the start of the week, I avoid the market totally because markets could go for stop hunts. There's something they call stop hunts. While we are in this study, I'll teach you guys what it means, and I'll keep saying it so you would learn and you would understand what it means, okay? So that is the best time. So I already showed you this. You can change it to your time zone, yeah, and so if it's open, this is how it will look like. It will look like this if it's open, yeah. So yeah, that is it for. So now you've known about the time zones and the terminologies for this. So see you guys in the next video. Please do not forget to subscribe, turn on your bell notification, and if you have any question, please drop your comments. I would always reply. Ciao.